Welcome back. You're watching Stock Picks. Today we look into infrastructure stocks, Raubex and Afrimat, and the poultry sector, Astral Foods and Rainbow Chicken, and food producer Libstar. Anthony Clark from Small Talk Daily Research joins us with analysis on those counters. Anthony, always a pleasure. Good afternoon.
Good afternoon from an extremely wet and very, very cold Cape Town.
Well, I'm glad that you look good. So you look like the weather isn't getting to you too much, Anthony. Keen to get
I wish it was sunny outside. It's not.
Yeah, I don't think it's sunny anywhere in South Africa today. But I think we soldier on, like typical South Africans.
Yes, I think since the election, I was tracking the changes in key constituents and the indices since the election ended. And for example, the Aussie is up 4.7%, the mid-cap index is up 6.2%, but the small-cap index since the election finish is up 10.2%. And interestingly, despite the fact the currency is fairly benign at 18.12 as I speak, there's been a rampant rise in certain domestic stocks, where I think certain investors and shareholders clearly believe that the government of national unity is going to come swooping in and fundamentally change the economic and consumer landscape overnight. And we've seen significant gains in certain share prices, but you and I both know that not a great deal has actually changed. Interest rates haven't gone down. The currency is flat. Yes, fuel's a bit cheaper, but the underlying economy is exactly the same as it was a month ago, except that politics now looks slightly better, but long may that last.
Of course, what's interesting here, Anthony, is I guess we might ask how much does how you can price in optimism, and that's what we have seen here. Really, it's sentiment for now. Like you're saying, the fundamentals are still very much the same, but there's money to be made in optimism.
Absolutely. If you would have bought a basket of stocks in the construction and food sector literally a few days before the election, you'd now be up an aggregate probably between 25 and 30% literally in about 6 weeks. We'll run through some of the counters when we do our narrative shortly. But I think there's been a great deal of anticipation that, a government of national unity and perhaps some key ministers in key portfolios in infrastructure, agriculture and other key areas of growth will see a renewed optimism, and potentially all the cash that is trapped inside companies will now start to be spent on capital investment and the uplift in the general revenue and profitability of these companies. But again, it's only been a month to 6 weeks. Things do not happen that quickly. But in certain stocks listed on the JSE, everybody seems to believe it'll happen very quickly.
I want to get into some of those stocks now because, of course, we've got some very interesting ones. I actually want to start in the poultry industry. And I want to start because I also want to get your thoughts on Rainbow as a new kid on the block. But let's maybe start at looking at those stocks specifically.
Yeah, sure. Well, for many years, only Astral Foods was listed in the poultry sector. Then we saw at the end of June, Rainbow Chickens was unbundled from RCL Foods, and it opened at about 365 and is now trading at about roughly 440, 450. But it's still 80% owned by Rembrandt. It's still majority owned by many institutions, and liquidity has been fairly benign. But we have seen some institutions in the last few weeks pick up some nice stakes to try and position themselves going forward. Now, the difference between Astral Foods and Rainbow, Astral being the number one poultry company in the country, producing about 5.4, 5.5 million birds a week, and Rainbow is number two, producing about 4.5 million birds a week, is a mix of their businesses. Astral Foods is predominantly in what we call the commodity end of a chicken market. This is the 2 kg quick frozen portions which the mass population tends to buy looking for value. That makes up about 54, 55% of their poultry business. Inside Rainbow, IQF, the cheap portions, only 24%, but 54% of Rainbow comes from what we call a value-added, fresh, value-added meats, Polonies, Viennas, Russians, and of course, servicing the QSR segment like KFC in this country. So on a mixed basis, Rainbow does look better than Astral. So as the economy hopefully starts recovering, the consumer starts to have more money in his pockets. The fast food sector starts to see growth again. It's been lackluster all year. And hopefully prices start to rise. Rainbow, in theory, has a much better mix of businesses than Astral to generate profit growth. But I have to contend, Astral is the OPEC of chicken. It is large, it is productive, it is very, very efficient. And any price increase we see in the chicken price moving up into the festive period, which we know is a long, long way away, but lead times in foods happen in months, not a matter of weeks. Could see Astral continuing to climb. And interestingly, year to date, Astral is up 17%. And just since the election, it is up 13%. But nothing has fundamentally changed in chicken. Prices haven't gone up. The consumer hasn't spent any more money. Chicken prices year to date are down 17%. And the only benefit is the maize price, which is the key constituent to input costs in chicken, is off about 2% in the last month or so. Nothing has changed, yet prices are running ahead. They're flapping higher, and they shouldn't.
I'm wondering what might also be bringing optimism here is a new Minister of Agriculture. We know that with the bird flu conversation, for instance, Anthony, a big issue and actually something that seems to be at a bit of a stalemate is the issue of vaccination and even how to treat bird flu in the future. And maybe a new Minister of Agriculture could actually be the answers to some of the issues that this industry has had to contend with.
Yeah, great question. I think we're all well aware that bird flu or avian influenza last year killed over 10 million chickens in this country and severely disrupted the value chain, particularly in eggs. Now, you can vaccinate the grandparent chicken. So the grandparent lays the egg that becomes the parent then lays the egg that becomes the chicken that we buy on our shelves and consume on a daily basis. So you can vaccinate the grandparents. So there will be no vaccination of the underlying poultry that we eat, but it will mitigate, hopefully, avian influenza going forward. But it comes at a cost. You have to keep vaccinating these chickens quite frequently, and that cost will have to be borne ultimately by the consumer. But hopefully the new minister will alleviate the problem we've had in this country in not giving compensation when a government-mandated cull due to disease actually has to occur. And several hundred million rand has been lost by the poultry and egg sector because of the government's reticence to actually compensate farmers when the government says, you must kill these chickens. We are the only country in the world that doesn't compensate farmers when there is a pandemic disease amongst the livestock. So hopefully that'll change. But as it stands right now, the poultry sector isn't looking that great. And there's a great deal of optimism that perhaps the chicken that lays the golden egg may happen, but I don't think it's going to come until much, much later this year. And I personally believe the share prices have run up too hard, too fast, on quite frankly, no news.
With that said, Rainbow has never paid a dividend. I'm wondering if that's something that might be worth holding onto a Rainbow, a stock for, Anthony. The prospect of, a maiden dividend and it being a good one, even though you're actually saying that the fundamentals are still not great for the industry.
Yeah, I met with Martina Stander, the CEO of Rainbow Chickens in Cape Town before they listed. And if you look at the presentation, the pre-listing statement for Rainbow, they only start making what I would call reasonable money in about 2025. And by 2026, the company should, in theory, all being equal to the input price with maize, the chicken price for the consumer, starting to make reasonable margins. It is only in 2026 that the company gives an indication it may start paying a dividend. So if you're buying Rainbow right now, hoping for a nice, juicy little golden egg in dividends, you're not going to get it. Even Astral Foods, with its interim results to March this year, didn't pay a dividend. The industry is still in a pretty fragile state, recovering from last year's load shedding, production problems, avian influenza, and of course the consumer who simply will not pay higher prices for chicken. As I said, the average chicken price this year in terms of the IQF 2 kg bag is down 17% year to date. Costs have gone up, prices have gone down, but it's not a situation which bodes well for the chicken sector, particularly this year.
It does sound like if the money's been made there, it might be great to maybe leave those counters for now, Anthony, depending on a strategy. I'd like to get your thoughts on Libstar. They also, in my mind, premium brands. If I think of Denny's Mushrooms or even Lancewood, these are premium household brands, but I'm keen to get your thoughts on what might be cooking there.
Yeah, good analogy, cooking. Yes, they're leading suppliers to the likes of Woolworths and Checkers, predominantly the medium to high-end markets. For example, one of the top-selling products inside Woolworths, which often surprises many, the top-selling product inside Woolworths is avocados, and the top free seller is chicken schnitzels, which Libstar actually makes. It's a strange fact, but true. So in Libstar's case, they came out with a 5-month trading update a few weeks ago, which surprised the market. It was actually pretty good. And despite the fact that the consumer and the retail sector is not doing that well. They've been restructuring their business and simplifying the underlying mix of companies down to a much more holistic and cohesive structure, cutting costs, reducing duplication, and making the business far simpler to understand and manage by reducing layers. Well, that's seen a very good 6 months or 5 months trading update, and that saw the share price move up quite nicely to touch 4 Rand a share. It has ticked back down to about 3.93 as I speak to you here, but it's still up year to date, around 20%, which is not bad for a food producer in an area of the economy which is not doing that well. We all know consumers have got very tight purses, and electricity is going up, interest rates haven't come down, so there isn't much money going around. But what money is going around seems to be going into retailers where Libstar services. So it's been doing extremely well. They tend to do better in the second half, and people start spending more money going up to Christmas. And as you say, we do have premium brands, Lancewood cheeses and yogurts. Denny Mushrooms isn't one, but I would say it's a premium brand. Every company that's owned Denny's for the last 30 years has lost money. And I would imagine Libstar will sell that in the next 6 to 12 months. But other categories they do, like Tabasco, bread products for KFC are all doing exceptionally well. And I wouldn't bet against Libstar. If it breaks 4 Rand, I think it'll go to 4.50 Rand. And it's been trying to break 4 Rand for the best part of a month. It's knocking on the door, and I think it wants to move higher. And I'm hoping on the 6 months results due in late August, September, it will hopefully breach that upper level and move higher towards Christmas.
I'm wondering if an investor may think, that there's actually more value in a Tiger Brands or an AVI here. Anthony, do you think Libstar is possibly the cheapest and the better one at this time?
No, it certainly isn't cheap, and it certainly isn't the best company. Any of the large integrated food companies like Tiger Brands or AVI clearly have better brands and a better reach to the consumer. But you're buying Libstar on the combination of this business needed to be restructured, costs needed to be cut, non-core assets in home care products like Denny's Mushrooms, amongst others, needed to be exited, and processes inside the company to manufacture foods needed to be made more efficient and more productive. This is now occurring inside Libstar, and that should lead to margin expansion and profit growth. Also, 38% of the company is owned by an offshore private equity player, which has recently been acquired by a large American company. And quite frankly, owning a stake in a South African food business, which is 0.00% in the greater global portfolio, might lead many to believe that at some point, corporate action could engender itself at Libstar, which has a number of very interesting brands, which I'm well aware many, many companies would like to get their hands on. So a combination of earnings improvement, efficiencies in the company, and a possible corporate activity keeps the stock, in my mind, the best one in the sector, particularly in the mid-cap food producers.
Let's move on now to our infrastructure companies there, Raubex and Afrimat. What are you seeing with these counters today, Anthony?
Well, here's what will surprise you again on the back of the election. Clearly, on new ministers in infrastructure and public works, the market investors clearly think that the taps will be immediately turned. For example, Murray and Roberts, since the election, is up 21%. We've got Afrimat up 4.5%. And this is the most surprising one. Road builder Raubex, since the election, is up 32%. So clearly the market believes that a new government dispensation clearly is going to see significant sums spent on infrastructure. This country, as we know, for the last 10, 15 years since the Soccer World Cup that finished in 2010, has not seen significant public works. So even though Sanral, the national road builder, has built substantial new roads around the country, hospitals, schools, universities, general upgrades, water, sanitation, electricity have all been lagging. And clearly the market believes that this government will play catch up. Now, it needs to happen, but I have to come back to the same question. Where's the money? This country has a very high level of national debt. The underlying economic landscape is not very conducive to companies producing more tax to pay to the fiscus. We can't exactly borrow more money because we're bouncing along at very hefty debt to GDP levels, and interest rates remain high. So again, I think whilst there is great optimism in the sector that there will be greater government spending, and clearly there has been, When I was on a Raubex site visit a month ago, the guy in charge of roads, and I give him a direct quote, said, "Anthony, we have seen more tenders from Sandrol in the road sector in the last 6 months than we as a company have seen in the entirety of the last 6 years."
Wow.
Sandrol's got money. They had 40% of a budget last year unallocated, and they want to spend. So clearly, if you're in road building, there is money around. But in other areas like electricity, sanitation, water, and general infrastructure, it's probably a little bit tighter. So I think certain companies that are run up, like Murray and Roberts, amongst others, perhaps are running up on anticipation of contracts to come, whereas Raubex physically has work out there which can be won. So I think right now, if I had to be in infrastructure, I would stick to the primary area of infrastructure where there is money, and that is clearly electricity in terms of renewable energy and in roads.
Well, that's it. I also want to get your thoughts in on Afrimat, because Afrimat also has been really good at weathering the storm here. Of course, not shooting the lights out, but I think really steady. The leadership is really, really strong. They've got this great acquisition that they've recently made in Lafarge. So it might not be in road infrastructure, but I think it's still one of the best that we do have in terms of infrastructure in South Africa.
Yeah, I completely agree. I'm writing a piece right now for your sister company, the Financial Mail, on Raubex and on Afrimat. And since the company listed, Afrimat listed in 2006 and Raubex listed in 2007. And the differentials in share price gains is quite startling. Since listing in 2006, Afrimat is up 754%. Raubex ran up quite sharply on the Soccer World Cup and then spent 10 years going nowhere. And since it's listed in 2007, it is up 150%, showing you that Afrimat's diversification into bulk commodities like iron ore, phosphates, anthracite, and latterly buying Lafarge, which bought a cement and a national footprint of aggregates, has been a significantly better investment. But Afrimat right now is still driven by iron ore. The iron ore price year to date has fallen from $144 a ton down to about 110. And domestically, as we all know, Transnet is unable to actually move goods around from point of production to the ports or to its major clients, again, hindering domestic industry. So I think in a 6-month view, Afrimat may see a bit of negativity from the weak iron ore price on its numbers, but into 2025, the kicker from aggregates into the construction sector and a recovery in Lafarge will deliver profits into the company next year. But for the next 6 months, I think it'll be fairly benign. And if I had to be in any one stock in the next 6 months, despite the fact that Raubex is up very sharply, year to date is up 68% compared to Afrimat's 18%. Clearly, the sale of the wind is behind the Raubex sale. And while Afrimat is a great company, iron ore will hold the company back for the next 6 months, whereas Raubex has got plenty of tarmac yet to go.
Love it, Anthony. It's all we have time for today. Thank you so much for taking us through these stocks and also helping us put that GNU into some perspective. It's an absolute pleasure having you as usual. That was Anthony Clark from Small Talk Daily Research.